Hello and welcome to this week's edition of Wealth After Work, the show designed to help you in and through your retirement. I'm your host, Kristen Oakley, and joining me in the studio, we have two members from ASC Financial Group serving all of Northeast Pennsylvania and Northwest New Jersey. Ralph Grosso, who is the president and founder, and then his wonderful son, Vice President and Senior Advisor, Josiah Grosso. We're so glad you're joining us today. The title of today's show is Taxation in Retirement. Are you ready for it? Stick with us to find out. But first, Ralph, Josiah, you know I look forward to this time with you each and every week. And we were talking before the show that someone recently called in and had some interesting feedback for you guys that I would love for you to share with our viewers at home, because I think this is a really fun story.
Yeah, Kristen, this is hilarious. So when he had called in, he said he looked at the show and it was so professionally done. There's no way it could be in the Poconos here.
Right.
But it's awesome. We have been in the Poconos for over 20 years now. 2 generations of families we've been helping with. Mm-hmm. I know I don't want to go anywhere. It's a fantastic area that we've got.
And I do have to tell you, Kristen, I have to take exception. He's not always wonderful, okay? So let's just get that straight from the beginning.
We'll clear the air, yes. But I think it's great that folks watched the show and thought the caliber of it was so high. They thought you guys, there's no way you could be based here. But you're like, no, this is what we do. This is where we live and work and help people. Yeah. So that's awesome. Well, I'm excited to have this conversation. It's an important one to have. You know, a lot of folks think that their tax bill will be lower in retirement, but that's often not the case. And so we're going to be sharing with you how important it is to pay attention to your potential tax bill in retirement and what steps you can be taking even now to help lower that tax bill for yourself. But before we dive in, I think it's important to clarify something, and that is that there's a difference between tax preparation and engaging in strategic tax planning, which is what you and the team of ASC Financial Group engage in for your clients. So can you explain the difference between those two things?
Yeah, Kristen. So when you talk about tax preparation, really what you're talking about is what an accountant or a CPA does. He or she looks at your history and fills out some tax forms and tries to help reduce your current taxes. Mm-hmm. That's what we call tax preparation is reactionary. Mm-hmm. Tax planning, however, is proactive. Mm-hmm. It is forward-looking. Okay. And the whole idea behind that is to really minimize your future taxes in order for you to have a net higher return and higher income that we have. So that's one of the keys that we really take a look at here. And if you think about it, if I'm in a 25% tax bracket, okay, and I've got a lot of money in my IRAs or 401ks, these are tax deferred vehicles. I've got a partner in there, Uncle Sam. Really what that's saying is a quarter of my money is not mine. It belongs to the government, and they're going to want to collect and get that money back. And so one of the things we really take a look at doing is if we can reduce that tax bill that we have, okay, and we're able to keep more of our hard-earned money, that means we can take some different strategies. Maybe we don't have to take as much risk in our portfolios in order to net the same outcome.
Yes, and to your point, that's what success in retirement is all about. It's not about how much you have, it's about how much you get to keep. And a lot of folks aren't aware that taxes are one of the biggest detriments to eroding your wealth. And so that's why we're devoting today's entire show to this important conversation. You know, it is also important to understand the tax bill for each dollar you own. And most folks enter retirement with 3 different types of retirement accounts. So let's go through each of these 3 types and help people understand a little bit about the tax implications of each one.
Sure, Kristen. So I want you to visualize 3 buckets. Our first bucket is our taxable account, our taxable bucket. And those accounts would be things like CDs, savings accounts, dividend and interest from stocks and bonds, right? This is money that I've got to pay tax on ordinary income tax. And here's the thing, we're going to pay that tax whether we take the money out or leave the money in. Okay, that's important to denote.
Yes.
So we're paying tax every year on that money. That's our taxable bucket.
Okay.
Then we have our tax deferred bucket. That's our IRA, our 401k, our 403b. That money now isn't taxed each year. It's deferred to a later point.
Right.
And so we believe that tax deferred in a lot of cases is better than taxable. Why? Because your interest is compounded without the benefit of without the exposure of paying taxes.
Right.
Okay. But then there's something called tax-free bucket, which we think is optimal. Why? In that bucket, your money is growing tax-free, your distribution, your income is tax-free. And that would be such things as a Roth IRA. We're going to talk a little bit more about that later in this show. But also municipal bonds. They're tax exempt federally and in some cases state tax exempt. And then we have life insurance. And life insurance is a great tax advantaged vehicle because not only does your money grow tax-free, it is distributed tax-free. Upon your death, there's a tax-free death benefit payable to your family. In fact, we should probably do a show just on the benefits of life insurance.
Yeah, and structuring that out would be great.
Here's the thing. The key is that you want to move from taxable to tax deferred to tax free. And so what we do for folks is what's called our retirement income analysis. And so if you're not sure where your money is, what bucket is my money in, or how do I move to that tax-free bucket, I want you to pick up the phone and give us a call so that we can do this complimentary, customized retirement income analysis in your specific situation, your tax situation, so we could take a look at optimizing your retirement. Please give us a call.
Wonderful. Ralph, Josiah, such valuable information. And if you're out there and you're going, yeah, I would love to learn how to create greater tax efficiency throughout my full financial plan for your retirement, we encourage you to pick up the phone and call the number on the bottom of your screen to schedule your very own complimentary retirement income analysis, 844-918-4867. Or if you'd like to connect online, we've got you covered. Simply pull out your smartphone. You can open up the camera app, scan that QR code that you see there down in the bottom right-hand corner of the screen. That will take you over to a landing page, ask you a few short, simple questions, and then a member of the team from ASC Financial Group will reach out to connect with you to schedule your complimentary meeting that way as well. Don't go anywhere. When we come back, we're going to be sharing a very special tool for you that previously was only available to existing clients of ASC Financial Group. We're going to provide it for you here on this show completely free so that you can anticipate what your potential tax bill might be in retirement. Stay with us.
I started the business back in 2005 as a legacy for my family. And I'm blessed to have two of my sons working with me.
ASC Financial Group, it's a family-run firm where we are focused on income, not just growth.
Many people can't say that they're able to work with not only their father, but their mentor and their best friend.
My main objective when I meet with someone is building a relationship, building trust.
All of the advisors and the staff, we're all listeners. It's not about telling people that come through the door what concerns them. It's about listening to them and really vetting what their goals and dreams are. We want our clients to feel like family, just like we are family within the practice.
And that's what we want to provide for our clients.
Welcome back to Wealth After Work. I'm Kristen Oakley here with both Ralph and Josiah Grosso from ASC Financial Group. We are discussing today taxation in retirement and posing the question to you, are you ready for it? And before the break, you all did such a great job of helping people understand that every kind of dollar you have heading into retirement is going to be having a different tax consequence. There's a tax bill associated with that. We're going to get to some tools for tax control here in just a few minutes. But before we do, I think it's also important for folks to understand why this discussion is so timely. So can you briefly help folks understand where we are as a nation in terms of our tax history?
Yeah, and let me do that by sharing a little story about a client of ours, Jim and Loretta. Jim and Loretta last year made $40,000 in income.
Okay.
But they spent, Kristen, $60,000. They created a deficit. And how did they make up for that deficit? They used a credit card. The problem is they've been doing this for a number of years. And right now their outstanding credit card debt, over $350,000.
Wow.
And so when I met with them, I said, look, we got to do something about the debt. They said, well, we'll take $300 a year to spend the debt down. Now, when you look at that debt, if they approached you, Kristen, and they said, would you like to go into a partnership with me on a business venture? Would you be inclined to want to partner up with those folks?
No, thank you.
Yeah. Well, listen, folks, there's really no Jim and Loretta. It's the United States government.
Yes.
Last year, we brought in $4 trillion in tax revenue that you and I paid in tax. But more than that, we spent $6 trillion. And like Jim and Loretta created a deficit. We've been doing that number of years. And right now, our outstanding national debt, is over $36 trillion.
And counting, it's going up as we speak,
Every 3 months, another trillion.
Yeah.
It's unsustainable. We believe tax rates, most economists believe tax rates are going to go higher. And so we need to be proactive in tax planning.
Yeah.
Well, especially because the majority of Americans have the bulk of their wealth saved up in those tax deferred accounts. It's whatever workplace retirement plan you might have. If it's a traditional 401k, 403b, whatnot, maybe you have a traditional IRA. There's all that money sitting there waiting to be taxed, and the government knows this and they want to get their hands on it.
Yeah, absolutely. We talked about most Americans right now have about 80% of their wealth in these tax deferred vehicles, these IRAs and 401ks. And here's the thing, Kristen, every time we take our money out of those accounts, it gets taxed as ordinary income. And so, I've actually sat with some people that says, no. I have a stock that when it gains in value and I sell it, I'm only taxed at the capital gain tax rate. Not if it's inside of your IRA.
Right.
It's only when you take that distribution. And so here's the thing, when you take that money out, it's gonna be taxed in your current tax bracket. So if you're thinking of taking a lump sum out of your IRA to maybe purchase a boat or a car or maybe even a house, what that does, that can throw you in a huge tax bracket or a higher tax bracket that you've got. And then the other case that we have here is again, one of the things we talked about. That's not all your money.
Right.
You got a partner in it with Uncle Sam, and they get to dictate how much of their partnership that they have with you. We already talked about that they're not the best custodians of that money.
No,
okay.
They're certainly not fiscally responsible. Let's put it that way.
No.
Right. And here's the worst part too, Kristen. Let's say I've got plenty of income and I don't want to take money out of this account because I don't want to pay more taxes.
Right.
I hit a certain age 73, that's what it is right now. That's our required minimum distribution. Even if I don't want to, I have to take it out.
Yep.
Because my big bad old uncle says if I don't, it's a 25% penalty.
On top of the tax you owe.
On top of the tax that you owe.
Right.
And so even if you have enough income and you have to now start taking that money out, that may trigger some really negative effects that we may not be aware of.
Right. So again, it's so important to pay attention to all of this. And I also want to point out in terms of our tax history, we are currently in the third lowest tax brackets we've ever been in the history of our country. I think people forget that because we feel like we're literally taxed to death on everything, but that presents a unique window of time where we need to be paying attention to this and take some proactive tax planning, if you will, into consideration. I know I teased up before the break that we have a very special resource that we want to share with all of you today. This is completely free for you. And we encourage you to visit the site we're going to put here on the bottom of the screen. If you go to asctaxtest.com, again, that's asctaxtest.com, or click on this QR code, you're going to be able to get a look at your numbers using the proprietary tax bill calculator from ASC Financial Group. So let's walk folks through. I know we have some visuals that we want to share of what they can expect when they go to the site.
Yeah, so this is going to be a really powerful tool, this calculator. What that's going to do is it's going to give you the ability to be able to see all of your qualified money and be able to plug that into the calculator. And then it's going to tell you, here's how much that tax is going to be over your retirement years. It's also going to talk about some other options that we've got in order to be proactive that we have and what that could look like if we reduce that.
Yes.
Because without that, Kristen, you know, some of those negative effects that we talked about here that we see is, again, not only can it throw us into a higher tax bracket that we have, but it could also increase our Social Security tax that we pay on our Social Security. On our Medicare, we have something called an IRMA that we have, an earnings test that we have. If we made too much, what we were paying maybe for $200 in Medicare may now be $300, $400 or more for the exact same benefit. And so that's one of the keys that we have here. And we want to make sure if we keep our money inside here, the last thing is it's going to be susceptible to any future tax changes we have. And that's why it's really important that we need to take a look at here.
Yes, for sure. All right, so everybody get your smartphone out. Go ahead and put in this website, asctaxtest.com, or scan that QR code, and we're going to walk you through what you're going to do. So we have a visual for you that we're going to put up here on the screen. When you go to that site, it's going to ask you for some very basic information. And again, no strings attached. It's completely free for you to utilize. You're going to put in your name, your age, your email address so that you can receive your very own detailed report. And then you're also going to put in the amount of money you have saved up in tax-deferred accounts. Maybe that's a 401k or a traditional IRA. You'll notice too on the bottom, there's actually two little sliders you can play around with. You can change the assumed tax rate if you think your tax rate might be different in the future. You can also play around with the assumed growth rate of that tax-deferred money. Once you click submit, then boom, you're going to see this next screen, and side by side, you're going to see the difference between the government's tax plan for you if you do nothing versus how much less you could pay in tax if you were to enact some of these tax saving strategies we're talking about on the show. So you'll get that snapshot right away, but then you're also going to have a detailed report emailed to you. And we have a screenshot here of one of the pages of that report where it's going to break down those numbers and it's going to show you the difference. And I have to say, guys, I know that when folks see these numbers side by side, their minds are going to be blown.
Eye-opening.
Yes. I mean, do you find that folks are just completely shocked once they see these numbers?
They are absolutely shocked out there. And so folks, if that's you and you want to take a look at it, I'm going to encourage you to go to asctaxtest.com or give us a call at the number below that we have here, that 844-918-4867. You're going to sit down with a member of the ASC Financial Group team. We'll walk you through our retirement income analysis. We'll walk through this tax calculator, and we'll see how we can help protect you for any of these future tax changes.
Josiah, Ralph, thank you so much. I know heads are spinning right now as you're visiting this asctaxtest.com. But again, you don't have to go this alone. We know that once you see these numbers, we're confident you're going to want to reach out and get that help. And as Josiah said, you can do so by calling that number on your screen or clicking on that QR code to schedule your complimentary retirement income analysis. We'll be back with more after this.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter. the one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Welcome back to Wealth After Work, where we just dropped a major truth bomb on today's show. We shared with you a very powerful resource that's free to you. And so if you're just tuning in and joining us, take out your smartphone. We encourage you to visit the following site that we have here on the bottom of the screen for you. That is asctaxtest.com, or you can scan that QR code. You're going to put in some basic information, no strings attached, and you're going to be able to see a side-by-side comparison between what the government's tax plan is for you if you do nothing versus how much less you could pay in tax if you enact some tax saving strategies. And let's go ahead and put up that slide again that shows the detailed part of the report you're going to receive with those numbers. I mean, I look at this, guys, and this was for someone who had $500,000 in their traditional IRA. Look, how is it possible that they could owe more tax on it than was actually in the account?
Yeah, it's really eye-opening. And it's just because it shows you how much over time, by just being reactionary and not proactive, okay, how much we can leave on the table because of the government with the taxes.
Yeah. Okay. So we have to talk about solutions for this, right?
Yes,
so next up on my list of questions for you guys are, what are some of the tools that you're able to use to help your clients lower their potential tax bills in retirement?
Yeah, the first thing we do, Kristen, is we sit down with somebody, we bring them through this retirement income analysis. The first step it does is it really helps understand where their money is. How much is in taxable, how much is in tax deferred, how much is in tax free, okay? And then we go through a process to really help show them how we can take some money from our right pocket, which is always going to be taxable, and just shift it over to our left pocket, which is tax-free, which means it's now insulated against any future tax law changes.
Yes.
Okay?
You're moving it from taxed always to taxed never again, right?
Absolutely. And one of the best ways we can do that is by doing a Roth conversion.
Okay. So we got to explain what that is and what that looks like. I know you do this for clients a lot. So define what a Roth conversion is and how it's done.
Yeah, certainly. So basically you have a traditional IRA, which we know is a tax deferment, right? We're just deferring, we're not avoiding. And you have the ability to convert that traditional IRA that is taxable into a Roth IRA that is tax-free. So what we're basically doing is we're going from tax, forever tax to never tax. So I've got clients of mine, Mike and Barbara in Warren County, New Jersey. They've been clients of mine for the last 6-7 years. And when we become a client, you meet with us on a regular basis. They came in for their annual review. And Mike was now turning 73. He now needed to turn on his RMDs.
Okay.
And he said, you know, Ralph, I don't need the money. I don't really want to take it, but my accountant is telling me I have to do this. I said, well, what was his advice to you? Just take out the RMDs. I said, okay, Mike, let's put you through our tax analysis, our Roth conversion analysis. And here's what quickly happened. He had about a $500,000 IRA.
Okay.
If he left it and followed his accountant's advice, just take out the RMDs and have a great life. Okay. Over his lifetime, and our clients live long. So we're looking 20 years out, right? Right, because our clients have a long, happy life, right?
Yeah, because they're having that stress-free retirement experience, right? Yes.
So we put this through the analysis. If they kept their IRA the way it is, took out their RMD, when they take out your RMD, you have to pay tax on it. They didn't need the money, so they would reinvest it back. You got to pay tax again. And then eventually 20 years from now, you're going to die, and now your kids have to pay the tax. Their daughter, Joni, would have to pay the tax on that money. We can easily achieve a 6-7% return for our clients. And so when you project that out, the taxes on the RMD, the taxes on the reinvestment, the taxes that Joni would have to pay would be approximately $420,000.
Wow.
Now we had an IRA of 500, 420,000 is going in the form of taxes. And that's in a 22% bracket. And we're assuming that there's no increase in taxes, that it's the same 22. Do you think that might happen? Well, we went through the conversion analysis, and here's the deal. You don't have to do it in one lump sum.
Right. That's
okay?
typically not recommended, right?
You ever hear the analogy or the story? How do you eat an elephant? One bite at a time.
Yes.
So we just took $100,000 each year and moved it into the Roth. Now you got to pay the tax on that $100,000. But here's what happened. Over the next 5 years, their tax liability would be $140,000.
Big difference.
Compared to $400,000.
Yes. Wow. And it's never fun to think about paying tax ever. But if you have a choice between paying only $140,000 versus $400,000, I know which one I would rather take, right?
Right. And as Josiah pointed out before, you're in partnership with someone, the United States government. In essence, what you're doing is you're buying out your partner over time.
Yes.
So that now in the future, it doesn't matter what tax rates are. If I'm taking that income and that money is coming to me tax-free, do I care if tax rates are raised?
Right.
It's tax-free.
Yeah. Yeah.
And
Big
so it's how
difference.
do we shift? And it's interesting when we do our retirement income analysis, it's going to show, like Josiah pointed out, taxable, tax-deferred, tax-free. Most people, the least amount of money is in tax-free.
Yeah.
When you look at where would you think is the best, tax-free, right?
sure.
So
Yeah.
we've got to show them how to make that shift, and we can do that simply by putting you through our retirement income analysis and our tax calculator. And so if you would like to know if you've got a traditional IRA, a 401k, a 403b, I want you to give us a call, come in and see us. Let's get this process started to see how we can put you more in the tax-free bucket and have a retirement that even if rates go up, tax rates go up, we're going to be okay because we're getting tax-free income.
Ralph and Josiah, thank you so much. What a powerful conversation we've had today. And I want to make sure we leave our viewers with that website that you can go and look at what your potential numbers might be. Again, we encourage you to visit asctaxtest.com or scan that QR code to see what your numbers might look like for your potential tax bill in retirement. And we're confident once you see those numbers, they're going to want to call and reach out and meet with you guys, right?
They absolutely will.
Well, wonderful. Well, thank you again so much. And thank you to our viewers for joining us this weekend. We hope you found this to be helpful and valuable. That's how it's intended each and every week. You don't have to go it alone. We encourage you to reach out to claim your complimentary retirement income analysis. 844-918-4867. Be safe, be happy, be blessed, and we look forward to being back with you next time here on Wealth After Work.